All right, welcome back to Yorba Radio, also streaming to you live on yorbamedia.com. I'm your host, Michael Yorba. Thanks for joining us. All right, we've got Nick Santiago with us this segment, President and CEO of In the Money Stocks. Nick, thanks for showing up.
Thank you for having me again, Michael.
And once again, I went back and listened to what you were saying last week, and dude, you're knocking it out of the park. Pretty good. Not too bad.
It's been a pretty good streak so far, but things are always subject to change. But so far, so good. We've had a great 2011.
Yep, you have. All right, you want to start off about China. You want to start talking about China today.
Yeah, I wanted to start off with China today because if you notice, the Shanghai index actually last night closed down about 1% or a little bit more than that, and that index is breaking down. If your listeners go back and look at a chart of the Shanghai index, you'll see that in November 2008, the Shanghai bottomed where the S&P 500 did not bottom until March 2009.
Give us a symbol.
You could look at the Shanghai $ SSEC, Sam, Edward, Charlie.
Got it.
Okay, and you could see that that index actually bottomed in November 2008, where the S&P bottomed in March of 2009. That tells us that the Shanghai is actually leading the U.S. markets. Today, the Shanghai made a new low for the year, and that's telling us we're not looking so hot here in the U.S. And that index leads us probably by a month or so. So it's actually indicating lower prices. Now, what I wanted to say is if China is starting to slow down and they are not investing abroad, that is definitely going to affect many economies. So we have a lot more to worry about right now than just the European crisis. The China story is really severe here.
Yeah, so that's like the old saying, when America catches cold, Canada catches pneumonia. We're looking at the same scenario here.
Same exact thing.
Okay, now, if that is the case of what's going on, and I'm looking at the index myself, do you see that primarily focusing in the equity markets where it's going to start showing up, or is this going to be a broader-based thing where they may even slow down on buying our debt, too?
Well, that is definitely a possibility about the debt, but we've already seen it here. If you've noticed the price in copper and the industrial metals, they've fallen off a cliff. So all really has to do with China more so than anything. And another thing I want to say about China is right now they're facing their own set of issues. There's 1.3 billion people there. So if they begin to slow down as an economy, there's a lot of mouths to feed there. And that's another reason why I think Ben Bernanke is somewhat handcuffed on doing another QE or quantitative easing program, because of inflation in China, India, and all the BRIC nations such as Russia and Brazil. It's really high right now. And these countries are really telling the Fed, hey, you better stop printing money over there in the U.S. It's out of control here. Food is getting to be really expensive. You're talking about China, which has 1.3 billion people. There's a high unemployment rate in China, believe it or not, when you have that many people that you have to feed.
So are you thinking that we're still going to be seeing lower prices across the board, or are we going to start seeing some increases because China's going to start going into the marketplace and buying in larger quantities?
Well, I think here in the U.S. we're going to see things a little bit better. As you know, I've talked about the U.S. dollar making a move higher, and it really has risen significantly. I think it's ultimately even going to go higher. So that benefits us here in the U.S. as a consumer. However, the global growth story, I think, is really done right now. We may get a little oversold bounce or something like that, but with China leading the markets lower, that is just painting the picture for what's to come. Not only next month but months down the road, that we're going to really face some tough times here economically.
Okay. And let's stay with that for just a second. When you say we're going to face some months now, tough times economically, paint us a little picture about how you're seeing this pan out.
Well, you got to look at 2012, and you got to say, we're starting the fourth quarter tomorrow, so or Monday, I should say. But the third quarter is coming to an end. Now you have to look and say, well, is 2012 really going to be any better? I don't think so. I think that we're going to be dealing with the same type of scenario, this stagflation type economy,
higher unemployment, stuff like that?
Exactly, and ultimately deflation. When you see copper, drop off a cliff the way it has, and it has fallen so sharply. I mean, you could just take a look at the chart of Freeport-McMoRan. I mean, we don't have to look any further than that. That's almost a copper barometer in and of itself. So, we're looking at a really dire forecast for 2012 as well.
Okay, and I'm looking at the Shanghai index. It's about ready to break those 2010 lows. It's real close. It's
very, very close. It is extremely close. I've been working out levels on that myself. I gave that to my subscribers, and I warned them, a while ago. We got to watch the Shanghai. I've been following this index for probably a little over 5 years on a daily basis, very, very closely. And, we're there. I mean, if China, you could say, is in a bear market right now.
Got it. Before we move on to the copper market, and we can bring that out a little bit more in a second, you are the first person to ever bring up using J.P. Morgan as kind of a leading indicator for our stock market, the S&Ps.
Yeah.
And then, I started to look into the banking index. Touch on that a minute before we move on to copper.
Sure. Well, I use J.P. Morgan because that's the leading banking stock in the United States. Really, the United States is still, the most, is the biggest economy in the world. So why not look at J.P. Morgan and cut the chase? We don't have to look at anything else. You'll see when that stock falls, the market follows. When J.P. Morgan moves up, the market follows. Today, J.P. Morgan finished higher by 92 cents. The Dow Jones was up 143 points by the close in one of the wildest sessions that we've seen in quite some time. But this stock is a leader of the financials, so just really just follow the leader for the most part.
Got it. All right. Again, let me push the copper out a little bit more. You had some exciting trades in your chat room, your trading room today, didn't you?
The chat room was it was an absolute blockbuster today. Traders, we bought Baidu at the low of the day. Some people took $4, $5, $6 off the table there. We shorted the spiders in the afternoon for 2 points. Some people used, the double and triple ETFs and made even more money out of it. It was just, we caught the move at the end of the day. It was just an absolute trading clinic today in the chat room.
Do you go into the market overnight, or do you stay out of it?
No, we swing trade as well. We are in overnight. Right now, I'm holding a half a position. I covered half my short position in the S&P 500 today, and I'm holding still a short position with a break-even stop in place.
Okay. All right. So you're still looking for further downside, and then give yourself some powder to go ahead and short a little rally. Got it.
Right. Right now, I think we have a possibility of a short-term 2 to 3 day bounce, but I don't see much more than that.
Okay. Now let's get to the copper.
Okay. Looking at the copper markets, I mean, how long, I'm not sure exactly when I was on your program, Michael, and said, watch the copper markets. I believe it was right around August 31st. I said these things will be turning down shortly, and we'll see Freeport-McMoRan make its way down to the $30 level, and pretty much that has happened. But now copper is oversold, so I'm looking for a little potential short-term bounce at best, or a sideways pattern, and then I think copper actually goes lower.
Okay. When you say short-term bounce, what are you talking about? Maybe up to the September 27th area, 348-ish or something like that?
Yeah, that's not a bad spot. It's really more, time is a little bit more important right now than price and the pattern. But, I would think maybe the 340 level, 345, somewhere in that vicinity.
All right, that sounds good. I want to bring out one of your other calls that you made that was really good. It was about the silver market. Last time you were on the air, you thought that we'd run down there and hit silver. I think it was the 22nd when you were on. Gold and silver were crashing. You said you thought it would be, kind of like start to settle out somewhere around $30, and sure enough, that's where we are, 30.52.
Yeah. I said, we may go down, test the $26 level, and then
and we did.
And we did, and settle up around $30. And
wait. I want everybody to hear this. 26.15, 15 cents off the low from where you said. I just want to make sure everybody knows how accurate you are.
I hope they come by and just give us a test drive for the free trial. We give everything out for free for 7 days. We've been going around the clock here, but that was it. I pretty much laid that one out there, and so far so good. Again, I'm not really bullish on gold and silver the second half of 2011, but I think they can be traded.
Yep.
They can be traded.
Well, you're proving it by me. You have. All right, give us a web address so everybody can get over there and get into that trading room of yours.
Okay, it's www.inthemoneystock, and that's an S at the end, .com.
Okay, thanks, Nick.